Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special corner where we're going to be focusing our attention on PVR Inox that's just reported its Q2 numbers. We have seen the company reporting a net profit of 106 crore rupees. Remember last year same quarter there was a loss of about 11.8 crores. The revenue has come in at 12.4% higher at 1823 odd crore rupees. This is a year-on-year expansion of 12% that we are seeing. On the operational level, we're seeing the EBITDA also improve by 27.7% this time, coming in at 611 crores, and the margins are also higher at 33.5 odd percent versus 29.5% since same quarters last year as well. Let's actually welcome the top management of the company to give us the details of what has really gone into the performance of Q2 and what do we look forward to. Mr. Sanjeev Kumar Bijli is joining in. He is the executive director of PVR Inox, and we're also joined by Mr. Saurabh Pant, the vice president of finance and investor relations at PVR Inox. Warm welcome to both of you. Thank you so much for taking the time out. Mr. Bijli, starting off with you, could you detail for us what all has gone into this performance? So again, coming back to the black year on year, what is really any factors that you could suggest that has helped this surge?
I think most basic is the fact that people have started to come back to cinemas. The content lineup has been very strong. All languages have rallied, be it Hollywood, regional, Hindi. We've had some big blockbusters like Sayyara, which was actually a sleeper
Yes.
hit. No one was expecting it to be such a big film. And then we had also English films coming out like F1, Conjuring, which is a horror film, which did about
Yeah.
100 crores in India. So content, of course, was one of them. It's also a season where there are part holidays, Independence
Yes.
Day, July, and people are going out a lot more. And I think with recent sort of changes in the tax regime, people seem to be having a lot more disposable income now to go
Okay.
out and spend at malls, retail, cinemas. So overall consumption seems to be up in our country. And I think combined with great content, plus the kind of experiments we've been doing with pricing, with F&B, and hopefully providing the kind of experience that we've always wanted to provide is what's drawing people to the cinemas again.
Okay, wonderful. You took a few names like F1 and Sayara.
Yeah.
Let me ask you on the others as well. There was regional performance from Loka that I wanted to ask you. How has that done in your South market, and how are you looking at that market as well now?
No, that's done very well as well. So I think that's what's been very heartening because content pipeline has been very strong, and
Yeah.
it's come from all regions. And as you rightly said, South India seems to be is obviously one of the strongest markets for us. The content lineup has been very strong even in this quarter, and even in the coming quarter, it's going to be very strong. Loka was very strong. And we continue to get some good content, and South India remains a focus area for us, even for expanding multiplexes further there.
Okay, and for Q3 also, do you find the lineup continuing to be strong and similar performance sustaining? We have Kantara, and there will be several others. Could you give us a few names that you're betting big on this time?
Yeah, of course, Kantara has obviously started with Q3 and has already done about 500 crores box office all India. We have Thama that's coming out on Monday or Tuesday now on Diwali. That seems to be a big film, from the universe of the Maddock films. We also have De De Pyar De 2 in November. And December again is looking very strong with Alpha, Avatar, Dhurandhar, and many other films. So we're pretty fortunate that the movie pipeline is extremely strong.
Okay, got that. Let me also come and bring in Mr. Pant into the conversation and help us understand on the occupancy levels as well. How has that grown over the last quarter, over the last year? Is there a substantial growth, and what is the kind of occupancy level that you feel that you'll be able to end the fiscal year with, sir?
Yeah, thank you, Sakshi. So, while we'd not like to give a formal guidance of what the occupancy could be, right? But yeah, given the performance that we have seen in the first half and in the second quarter, if you look at YOY, this quarter occupancy has improved by more than 300 bips. If I compare the occupancy from Q1, then the occupancy has improved by more than 650 bips. So it's obviously given the great performance of all the movies that Mr. Kumar also talked about. We have seen almost 22 odd movies crossing the 100 crore mark in the first 6 months of the year, which is the highest post pandemic, which is driving the occupancies. We hope and we believe that this will sustain given the great content pipeline that lies ahead of us in both Q3 and Q4. But we would refrain from commenting on what the full year occupancy could look like.
Okay, could you also give Mr. Pant an idea of the average ticket pricing, any discounts that panned out over the last quarter? What are the pricing trends that we expect going forward from here? You've also done a lot of experimentation with the dining experience also coming in there. Could you give us some more details on to how as to what is the demand right now for this and how is that going to be translating to the bottom line going forward?
Sure, absolutely, Sakshi. So, as Mr. Kumar said, we have been experimenting a lot on pricing for both tickets and F&B, right? The biggest initiative that the industry took at the start of the year was institutionalizing Blockbuster Tuesdays. And currently, after the reduction of GST, tickets are priced at as low as 92 rupees on Tuesdays. I think a lot of demand is obviously being driven because of the certain initiatives that we have taken. If I simply look at the admissions in the first half on Blockbuster Tuesdays, they have contributed about 15% of the overall admissions of the first half, which is a significant number. On both F&B as well, we have been experimenting a lot. There are now offers on all weekdays and all weekends on both tickets and F&B. Your second part of the question was on
How this new experiment is going to translate to the bottom line going forward?
Sure.
What's your expectation?
So, Dine-In is a new premium concept that we opened in M5 ECT Mall in Bangalore about a week back. Instead of booking tickets, people need to book tables, and there are tables of different sizes, which seats 2 people or 4 people or 6 or 8 odd people. There's an LED screen instead of a normal screen, and there is no projection because you have an LED screen, right? This is a premium format that we are experimenting with, and we expect the offtake on ATP and SPH to be significantly higher than on other screens. This is currently in a pilot stage. We will look to expand it to other cities after we take in consumer feedback from the one screen that we have currently launched.
Okay. Mr. Bijli, I want to come to you for a broader question first before coming down to more specifics. Just recently, we've been looking at how the external policy changes are impacting a lot of industries in India. And for movies also, we've seen how Mr. Donald Trump has talked about how movies made outside of India will be attracting more tariffs, 100% tariffs. Do you think something, like you, would be impacted by this? Have you assessed the impact at all, or do you think this is largely going to go again in a taco trade?
The latter, 100% is going to go to the latter because I don't think this statement has been thought through, first of all, and secondly, it's not something that has been passed as yet. I think it's just a statement, and I don't think it's going to just affect us, but the global industry, because there are so many films that are co-produced by different countries and in different parts of the world. So I think it'll be very difficult to implement something like this. So we're not bothered about that at all. I think we are also in a country where we enjoy so much content from so many different languages, and our whole country itself is so rich in content, be it Hindi or regional, that is something which also differs us and from all the other industries around the world.
Okay. Mr. Bijli, help us understand now about the screen additions. What have you planned? How did it pan out in Q2, and what's your expectation for the second half as well? By the end of the year, what are we expecting on screen additions?
We've opened about 42 screens in the first half. We had a target of opening about 100 screens. We're already at 1,755 screens. So we're very conscious now going forward that we actually open the right number of screens in the right catchments in the right cities and look at gaps now. And therefore, we're looking in even places like Northeast. Yesterday, we opened a new complex in Siliguri, and we'll be opening one in Gangtok, our first one this week, next week, hopefully. Also, pockets within Bangalore, Hyderabad, Mumbai, which are unserviced right now. We're opening cinemas there as well. So we are looking at a big expansion all over the country. We'll be adding about 52 more screens.
Okay, got that. Mr. Pant, coming to you, help us understand with a little bit on the capex that you've been talking about, that you'll be opening more such experimentation with the dining in other cities as well. So, what's your capex plan for this year? And, what does it do to your margins? This time around, the margins have grown. Any key factors that have driven the margins, and what will you end the year with, sir?
Sure, Sakshi. The capex for the first half stands at about 138 odd crores. We had given a guidance of about 350 to 400 odd crores at the start of the year. We stand by that guidance. So the total capex by the time we end this year should be in the vicinity of about 400 odd crores. It's split between new screen capex, renovation, and other initiatives. So obviously, as the pace of expansion picks up in the second half, the capex will also pick up in the second half as we go along. So that's on the guidance bit. On margins, I think it's the occupancy that will drive margins. Occupancy has been really strong in Q2 and in H1 to some extent. We expect that this run rate could potentially continue for the rest of the year as well, given the strong content slate that we have. And therefore, that will be the biggest driver for our margins going forward.
Okay, fair point. Last word from you, Mr. Bijli, if you could help us understand when we compare with FY25, what's the kind of growth that you're expecting for FY26? Do you think it will be a considerably much improved year with all the factors that you listed out, the tax cuts that we've been seeing both on the direct and indirect side, the consumption demand that has really picked up and how people have started to go back to the cinemas as well. So given all of that context, what is your expectation?
I mean, again, I'm not giving any guidance, but given the way H1 has planned out and the numbers are there already, I think we're pretty sanguine and optimistic that the next 6 months also will pan out this way, purely based on what we have in terms of the number of screens that are opening, the places where we're opening these screens, which seem to be the kind of cities and towns where there will be a high propensity to watch films. Plus the content pipeline, which seems very strong. There's something for everyone, and there's something from every language and every region. So we remain optimistic, and fingers crossed, I think hopefully it's going to be a good year.
Okay, thank you so much. All the very best to you for the upcoming quarters.
Thank you.
Thank you so much. Appreciate your time with us on Business Today Television.
Thanks, sir. Thank you so much.
All right. Okay, viewers, we'll wrap it up on that note with the exclusive chat that was just underway with PVR Inox on the growth path ahead and the earnings that have just come in. I hope this has given you more insights as to how the company is moving forward with their plans going forward from here. Stay tuned with us as Business Today Television continues to get you all the market updates right ahead. At 3 p.m. I'll be joining you with the closing edition of Market Today as well. Stay tuned for that.